We saw something today that we haven't seen at all since the lows in early February that can help tell us how strongly bullish we are or not. I'm going to break that down as well as all the other patterns taken together that give us our overall market posture and what to expect going forward. Today's trade idea takes a look at a long-term trend opportunity. Let's go ahead and get started. Today is June the 6th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thanks for tuning in tonight, everyone. Welcome to those who are watching us for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel by mousing over the Market Scholars logo in the bottom right corner of your screen, and then click the red subscribe button there. Like today's video. Comment on anything that stands out to you. Join our daily Market Outlook email list. There's a link that's popping out in the top right corner of your screen. Click on that link. That will take you to a spot where you can sign up for our list. Follow me on Twitter for more content like this. Also remember to like and retweet tonight's Market Outlook tweet, always pinned to the top of my timeline. Join the Market Outlook community on Facebook. All right, well, let's start off by taking a look at the S&P 500 with the market forecast indicator. The S&P 500, which broke out today, big strong move up almost a full percentage point. You can see the intermediate line getting higher than it has this whole time. It got close up over here to just above 90. Now we're at 93. So strong bullish posture. Continuing market sentiment close to crossing above 50, which is that last kind of step. There's another thing we'll take a look at here in a second with volatility, but that's kind of one of that last little steps that the market sentiment line needs to do for this bullish trend to kind of like say, okay, I'm here. We've got a lot of different things. We've got a strong bullish posture. We've got shaded green areas and all these other charts. Market sentiment being that kind of last thing, which you notice again has already crossed above 50 on the Nasdaq, had never crossed below 50 on the market on Russell 2000. So there's a pretty good chance, of course, nothing 100%, but pretty good odds that you'll get it crossing above 50. And when it crosses above 50, that's when you start your market sentiment run that could last multiple intermediate rallies. We're currently in the first one, in the first intermediate rally right now that could last 2 to 3 months, and again we are 1 month into it, so we got another 1 to 2 months. Now this doesn't mean we'll go up every day, as seemingly as it lately it seems like we're up 5 out of the last 6 days, so it seems like we go up every day, but that's not the case. And again, when market sentiment's rising, the path of least resistance is to the upside, so you're going to get more up days and down days. The down days will be bigger, and so some of them will be so it's not every day up. But it will, it will seem that way. I mean, look over here. It will seem that way when market sentiment's rising and when it's established in the reversal zone. So we're getting it. It's rising right now. It's just not quite above 50 yet, where we feel like, okay, we're good now. We'll see how long this runs, this lasts. Of course, things can change, and we'll look for signs of when and if it can change to alter expectations. But right now, we continue to push to the upside. According to what we're seeing on the market forecast, and the expectations is that should continue. Now, if you look at the near-term line, the blue line, here's the last near-term low point that we formed right here, according to this blue line. We're coming down from this near-term high point where my cursor is, again corresponding to that near-term high. So yeah, when you take a look at the near-term line, there's your near-term low point that we're coming up off of, coming down from that near-term high. So we crossed up above the near-term line, or the 50th percentile here. 1, 2, 3, 4, 5, 6 days now, and the typical near-term rally is 7 to 12 days when you're in a bullish market like this. So we have a good move going here. We're well into that. Near-term line's not going to drop below 80 anytime soon. So we have a good thing going here. Now, granted, how are we going to go at this pace going forward? It's a pretty decent pace, and you also see too, the numbers over here that were negative, especially the 3-month return that was negative, that was strongly negative. It's really made a turnaround, and it's now up almost to its historical average here. So that means there's still some upside left out of this, and I think there's some upside left in the near term. I think we'll start slowing down now that we're to that 7-day mark. If we do continue higher, we'll probably get some days like this where it'll be small ranges, still pointed upwards, but smaller ranges before we get a near-term pullback. That could very well be another bullish near-term low point. In this case, instead of being a lower near-term low compared to these two lows here, which was a lower near-term low, you would expect the next low point to be a higher one because of the posture, because of the strong posture that we have. The Dow Jones Industrial Average has been lagging behind. It had not broken above those highs yet, finally doing it today. So kind of establishing itself. See, it was the only one out of all these indexes to not be shaded green because we had a weak bearish posture. Not enough to change, not enough to be bearish. And you can see there was a little sprinkling of red on the moving average. But ultimately, breaking back out with everything else. You can see the NASDAQ continuing higher and well up above its moving average, and the Russell 2000 too. Wouldn't be surprised if, that's the fact that these indexes are showing that there's a lot of breadth right now across the market. We're not, if the Dow's outperforming, that means we have very little breadth, that we're focused on the small issues, and the S&P to another extent. But when the Russell and the NASDAQ composite, not the NASDAQ 100, but the NASDAQ composite, when these two are rallying as much as they are, and the S&P is rallying as much as it is now, it didn't outpace the Dow today, but it has been, then that shows breadth, right? Those are your bigger indexes, mid-cap, some mid-caps in here, and especially small caps index with 2,000 issues in here, or at least according to the name. So that's a good sign from a market standpoint when this leads the way higher. We're underperforming today, so we wouldn't expect it to always lead the way higher. As we have now established the bullishness, which is what you need breadth for. Now, as you continue to push higher, you'll start to get less and less breadth, and you'll start to see more rotation among different areas. Now, again, a reminder for those watching the video through our blog, and to get to our blog, there's a link that's popping out in the top right corner of your screen there. But if you're watching the video here within our blog, remember you have all your YouTube controls on this as well. But I just want to remind you, you can like and retweet tonight's Market Outlook tweet right here just from the screen. You can do it while you're watching. For those who have Facebook accounts, you can do that here too. Just hit that like button again while you're watching. And then for those that are subscribed to our site, Market Scholars, you can also click there. So those 3 clicks, boom, 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 those 3 clicks tell me that you want us to do this video again tomorrow. And the day after that, and every time you do that, that's your feedback to us to keep doing this. So we really appreciate those who do that, and like I said, if you feel like you want us to keep on with this, let us know. That's the easiest and quickest way to let us know. All right, back to the charts. You can see again, so we have the shaded area green on the market forecast chart because the intermediate posture is bullish. We're green here on the long-term chart because we're above the 1040. And you can see we have the weekly chart. We're above a rising 50-day moving average. They're both rising, and the gap between the two is rising. So all bullish across the board. And then finally, when you look at the 3 green arrows for the S&P 500, we got all 3 green arrows. So we got a shaded green area here too. I mean, we've got all 3 the 2 intermediate charts, the market forecast and this chart shaded green, the long-term chart shaded green. And you'll see here in a second some other confirmations too. Again, lacking that confirmation still on market sentiment. So we're almost there, but not quite. But still positive, breaking out all across the board here. And you look at the 3 green arrow, you look at the lines separated. MACD's above its moving average, Stochastic's above its moving average, both rising. They're pretty positive. So, they're overbought, but they're not extreme. And we are, well away from the 8-day moving average. That's why I say you'll probably start slowing down. Doesn't mean we'll drop, but you'll probably start slowing down because of how far away we've gotten with today's kind of breakout move. But I don't think the posture will turn bearish anytime soon. We have to kind of break that 17-day moving average again and test that 30-day moving average before you start considering the prospects of a posture change. So we have a strong bullish chart here when you're looking at these multiple oscillators together. All right, the other confirmation that we're looking for here is the fact that we are trading in the upper half. So on the short-term charts, we got the long-term chart, which is shaded green. We have the other charts that are shaded green too. And here you have the short-term chart giving us bullish confirmation because we're trading in the upper half of the chart. And you can see I mean, we closed at the 4-week high point. We can't really be more bullish than that. Closing at the 4-week high point, the 4-week low point is as far left as it can possibly be. Very strongly bullish. Now, that's not going to be the case tomorrow. That's going to move up to this low point. So, which means this will move up too. It'll probably about right in that area. That will be the 4-week midpoint. So, the range is starting to tighten up again. It was, more than 20 points, and now it's about 10 points, and it's going to, it's going to be about 10 points depending upon how much we keep pushing up here on the top. We're not going to move up on the bottom anytime soon, so depending upon how much we move on the top over the next couple of weeks until this does move over here, we're starting to tighten up on the range. So, but still in the upper half of the range, and again, closing at the 4-week high, you really cannot get more bullish than that. The volume was just about an average volume, slightly below average. The range today, if you look at the range of, what was that, next to the R, 2.43 points. Just to look at, how that's a pretty decent range. Let's see, I need this one. You can see the range, the relative the ATR relative to price. So this isn't straight up absolute value. This is a relative value. 2.38 again is where the average now is dipped below 1%. 1% being 2.77, right? That's the 1% mark. Kind of a magic number. When you're below 1%, you're bullish. When you get above 1%, you're going to have some volatility and bearishness there. We are now below 1%, so we're entering, this is kind of a recent breakout. So that's another confirmation of a bullish trend here. Volume you can see continuing to decline. And then the other thing, the last thing, that volatility component that we haven't seen yet. If you take a look at the VIX, just MACD and stochastics, so you see how we dropped below 12. Just like that, we're back below 12. Can you believe how low volatility has just dropped off the cliff here since basically since last week when we were up to above 18. So just like that, falling off a cliff. And then you can see something that we haven't seen yet is closing below the 85% mark. We haven't closed, the VIX relative to VXV hasn't closed below the 85% mark this whole time since we bottomed out in early February. So this is kind of another one of those, one of those kind of confirmations that the bullish trend is intact. So we've got shaded area on the long-term chart, the 1040 weekly crossover. We got shaded green areas on both intermediate charts, the market forecast and the 3 green arrows. We got shaded. We're in the upper half of the 4-week range. So there's your short-term confirmation. Market sentiment's close to being above 50. That would be your other long-term confirmation. And then you can see volatility getting down below 50 with ATR getting below, or volatility getting below 85%. 85% being the sweet spot, but you typically want the low, you want it trading in this area, ups and downs in this area here, and you don't want the lows to be 85 because when it bounces up, it gets back in the neutral zone. So more bullish, when you get below 80 and we hit that extreme and we kind of bounce up and down there. So all positive developments, all kind of combining to show, okay, we are bullish now for a while. That's the expectation. Now again, that doesn't mean the 100% chance that we will be bullish for a long time. So we're going to watch for signs that those expectations will change. But with all these technical factors out there, just to kind of summarize, with all those technical factors out there, we have, an established bullish posture. It's a strong bullish posture, and it doesn't show signs of weakening anytime soon. Now, it doesn't mean that we won't have near-term pullbacks. We'll have plenty of near-term pullbacks. But in terms of the bullish trend, it's established now. There's no longer, well, we need to wait for this. We need to wait. No, it's established now. We have breadth because of the outperformance in the Russell. We have a lot of these signs that we look for, all there now. Now again, there'll be short-term weakness. There'll be 3 green arrow chart won't always be shaded, but as of right now, we have everything there. So the posture is bullish, and we need to act accordingly, and we can act accordingly with trend trades, especially now with market sentiment close to starting. Getting crossing above 50 and starting long-term run. So what do you think? Let me know with this poll that's popping out in the top right corner of your screen. Click on that poll. Let's see if we can get more than 100 votes this time. We get 1,000 views, but we don't get 100 votes. So let's see if we can get 100 votes. Are you bullish? or do you agree with this current market posture, or disagree? And if you disagree, for whatever reason, I'm not saying you're wrong or I'm wrong or whatever, right? But if you disagree, love to hear what you're seeing, and just comment down below so we can all benefit from that different perspective. Now let's take a look at what's driving the price action today. And on the calendar, a few things came out, but the biggest thing that was kind of in the news is this trade balance. And of course, it's the deficit narrowing down to 46 billion. You can kind of see here the growth, that the deficit had been rising since the beginning of this year to over 50 million, and now pulling back. It's still, we've been lower than this, and so there's some headway there, but you can see a lot of that deficit coming from the lack of imports, tariffs, demand. You can see the export growth is still maintaining a strong pace, so we'll see if that discrepancy continues, or will the tariffs on the other side of the equation impact export growth similar to the import growth, and how will that impact the deficit. But so far, the deficit's rising, and you can also see there's a few other things that didn't really, productivity doesn't really impact. Keep in mind that productivity growth and labor cost growth, when the market's doing really, really well, productivity will actually go down, relatively speaking, because you'll be hiring and you'll spread out the work across all the new employees. So think of it, not think of like total, but just kind of on a per employee basis. So you'll typically see productivity go down. You can see how it's pretty much close to zero here, again because you are hiring so much more. But then also in really good bullish cycles of the economy, you'll see unit labor costs also be strong. So again, a reflection here of just how strong we are in the labor market. On the flip side, when there's layoffs, that means you are now being a lot more productive with fewer employees, so productivity will rise. And of course, because you're cutting labor costs, you'll see that drop down. So a sign that we're in a strong market. It doesn't really move markets on a on a one-day basis, but it's a good sign just to see how bullish we are in terms of economic growth expectations, which you can see, we were revised today down to 4.5%. Will be revised again on Friday, but for the second quarter being down, revised down to 4.5%. Still very, very high, still above the original estimates when we first started, and long the rate hike expectations for December creeping back up, so we're back up above 41%. We were up to close to 50% before with these odds for a rate hike in December, so we're starting to get back to that level again. So, and you can see the odds of having the third rate hike in 2018 is over 70% in September, and of course getting the second rate hike in this calendar year is close to 100% odds here next week, on a week from today. So how's that impacting all the asset classes? Look at the, this is over the 2-week period. You can see a little bit of pullbacks, especially due to what's going on in Europe and overseas. And, there's where we had, that big down day, the Monday after Memorial Day, where bonds rallied and emerging markets especially dropped and crude oil dropped. Well, from the low point at the end of that day up through now, you can see stocks just have taken off. All these asset classes, especially emerging markets, up over developed, IWM over, IWM outpacing the S&P during this bounce. You can see high yield outpacing long-term bonds. So there's your long-term treasury bonds. Those are dropping significantly there after having some pretty decent gains. And then, of course, crude oil. That's not normal. Crude oil, down 2.5% with supply data impacting, OPEC and supply data impacting, but still a strong long-term trend right now on crude oil. And you can see the dollar has been falling too, despite increasing rate hike odds. The dollar has been falling, and that hasn't helped gold yet. Gold, being a safe haven outlet, is pressured by the rise in risk appetite right now. So when you look at sector rotation, the sector rotation across the different charts here, You know, there's one really that stands out to the downside, and that's utilities. And that utilities is falling off like a rock. On the flip side of that, you can see materials taking off and closing above recent highs. You're not getting that in energy, but you're getting that in materials. Financial also bouncing up. That's kind of an either or trade, utilities and financials are bouncing finally back up above their moving average. Rising intermediate line has been lagging some of these others. See the strong moves in technology and discretionary. Those are your leaders. Healthcare also breaking out today with a move up above recent highs. It's got a stronger posture than materials, but materials is close to getting above 80. So there's your strength. There's your pocket of strength right now. You can see where your weakness is, especially here. Staples has not quite benefited yet. So that's staples and utilities, you know, are not places to be right now from a trend trading standpoint yet. Real estate and telecom are doing okay, but they're lagging. Real estate's actually doing a little bit better, but telecom really lagging behind. You know, and of course, financials is got some room to grow. So, you know, so the areas to kind of avoid staples, you don't have to avoid it, but you're just not going to get a lot of outperformance. We're avoiding utilities. It's breaking below recent low, 3-month lows to a new 3-month low. And it's below a downward trending moving average. It's got falling intermediate posture. I mean, it's bearish across the board. Really struggling with the rising rates. You can see if I were to throw on the rate, the 10-year yield, making a bounce back up with 3 green arrows today on this chart, and you know, the moving average is red. It's been declining, but you know, it won't be red for long if we continue to get above that. And you know, if you look at the long-term view of the 10-year yield, you know, bouncing back up above with a long lower shadow tends to be a bullish sign. So we'll see how bullish that is. It's more bullish when you've pulled back more. This is a 2-week pullback. It's not that big of a pullback. But we'll see how bullish that ends up being with this nice bounce back in the 10-year note. Again, bullish for financials, really bearish for utilities, which is just getting hammered. Again, bouncing down from a downward sloping 50-day moving average and below a 200-day moving average. And I've mentioned before the weakness we're seeing in the staples, at least basing here. You can see why we're basing here. There's some strong support in this area. But not taken off yet. So it will. I mean, there will be rotation into this area eventually as the bullish market matures, as this bullish market sentiment move matures. Right now, the strength is in your typical leaderships, technology and discretionary, just taking off like a rocket. One stock that has been beaten up itself is Harley-Davidson. You can see, you know, look at all the red across the board here. Year to date, 3 months, 6 months, 1 year, all across the board. It's got a pretty bullish range today, though. That's why it's colored differently there. If you take a look at the long-term view of this, of Harley-Davidson on the long-term chart, you know, well below a 50, it's 200-day moving average. Below a downward sloping 200-day moving average, and finally crossing back up above a 50, kind of hitting some support in this $40 area that we've hit before in early 2016 when the market itself was really bullish. And then, of course, the stock bounced about 50% to get up above 60. So that sparked a good run there before giving all those gains back over the past year or so. But, you know, getting a good bullish pattern today. You know, with the 3 green arrows, you can see from a market forecast perspective, the intermediate line didn't quite get below 50, but it's bounced back up. You know, market sentiment's well below 20. So and look at all the clusters that we got here during this pullback, including the market sentiment being below 20. So a lot of opportunity. That's on the daily chart. If you look on the weekly chart, you can also see clusters with market sentiment also below 20 on the weekly chart. So that's kind of a rare thing. And if you look at the monthly chart here, the near term, not surprising, the near term and the momentum line down, but look how low intermediate line is. So again, that run that we had came off of monthly clusters. We were also very low here on the near intermediate line again. So, you know, there's opportunity here for a good trend to develop. You can see when you look at other charts like the Bollinger Bands, not quite getting up above the band because we were getting some strong volatility here. So we're starting to make our way back in the upper half of the chart. We've got a relatively low bandwidth. The other chart too we like to look at is at DMI. Pull up HOG on DMI, and you can see both lines were below 25. The positive line crossed up above 25. The ADX is in a trend-ready state, and like I said, that three green arrow chart, you can see down at the bottom on the volume that you are getting 1.5 times the average volume. So 3 green arrows on a sideways trend with 1.5 times the average volume. That's a good typical trend trade signal, and there's plenty of opportunity for HOG to continue to move to the upside on that signal. So again, you buy on the 3 green arrows, you set your stop order below that low point. So whether you buy the stock or you go long term and buy a leap, you can buy one of these leaps here and just kind of set it and forget it kind of a thing. You can take a look at buying at the money option here, which would be this one, 42.5. So buy that at the money option at 3.95. Instead of paying $42.94 a share, you pay $3.95 a share, so you get a little bit of leverage on that. And again, you would treat it, you would put a stop order, but instead of actually putting a stop order on, you just put kind of alert on to, if the stock pulls back below that, then you buy back that call option. Otherwise, you just let this thing continue to run, and you would look for an exit signal like you would if you own the stock. But when you get that exit signal, you would, instead of getting stopped out automatically on the stock, you would just go in and close out your option trade. So 2 different alternatives to make a trend trade here: either buying the stock, with that price per share, and of course stop order below that support, below that low point, stop order below that low point. That would be your trade risk, and then your portfolio risk 1 to 2%. Or instead of buying the stock, buying a long-term option. Not using a stop order on that, just using the same exit rules that you would use if you were to own the stock. So closing out that call option trade when you would have been stopped out on the stock if you own the stock. So that wraps us up for today. As always, thank you very much for watching, and love to chat with you about tonight's video. And the way to do that, there's a link that's popping out in the top right corner of your screen. Let's chat about this in the Market Scholars forums, in the Market Outlook forum there on marketscholars.com. Remember, you have to subscribe to the site to be able to participate there, but let me know any questions or comments you have about today's market posture or today's trade idea in those Market Outlook forums. As always, thank you very much. Subscribe to our YouTube channel, like the video with a thumbs up, comment on anything that stands out to you. Follow me on Twitter for more content like this, and join the Market Outlook community on Facebook. Remember, you can also do all those things on marketscholars.com as well. Thank you again. Have a great evening. We'll see you all next time.